welcome. I'm Siddharth Zarabi and with me my colleague Abha Bakaya as we count down to the Modi government's 10th budget and Nirmala Sitharaman's fourth presentation, fourth outing in Parliament. A big budget really that is expected, coming bang in the middle of Modi 2.0 and our booster shot budget as we have been calling it on India Today. This budget which is being presented today by Nirmala Sitharaman is going to be seminal and very, very important. Like I told you, the 10th budget of this government, the fourth outing by the Finance Minister, and very clearly it comes at a time when India has hopefully successfully battled the third year of the COVID-19 pandemic. It comes a few weeks before assembly elections in key states of India. Remember, there are 7 elections this year and 5 of them in March. So can this budget revive India's economy? Can it give a boost to consumption and investment and put the country on an equitable growth path? Will this budget create jobs, boost that aspect as well as enhance social welfare? How will Nirmala Sitharaman walk between that tough path of fiscal consolidation on one side and continuing support to growth? After all, the past year, which is the current financial year, has been a year of ups and downs. So for all of that, keep tuned in as we unpack yet another budget by the Modi government and tell you through the day today what is in it for you. And I'm going to get you some more details of the budget, Abha. Very clearly a very important day for all of us here. And if you can see, let's start with some of the important data points as we bring up, which is one of the key ones being the GDP estimate. But before that, the 10th budget of the government, and this is a history of the Modi budgets, July 10, and if you look down, 14, 15, 16, 17, 18, and the late Arun Jaitley, one of the finest lawyers of the country, a BJP stalwart, Piyush Goyal did one interim budget on the 1st of February, that was 2019, the year of the general election. And Nirmala Sitharaman's been here before 3 times, the 5th of July and in 2020 and 2021. And 2021 as a budget was a very significant and important budget. And now the main headline which the economic survey brought to us. Let's start with that number, the GDP estimate, and right here, the economic survey number of 8 to 8.5%, and you can compare it with other estimates, the IMF at 9%, the World Bank at 8.7, 7.8% by the RBI, the India ratings, and this is the next financial year's estimate. Let's just focus for a moment on the economic survey estimate, and very clearly the economic survey estimate tells us that as far as the GDP is concerned, from the current year's run rate of 9.2%, remember that final number is not still with us, it is going to come in perhaps in this range. It could be better. There's been a bit of a concern around the third wave of Omicron, but we are going to talk about that with all our guests today. And Abha, take it from here, because the markets are expecting another big bang budget, and for the Aam Aadmi there has to be something which takes care of all the pain that he has seen because of the third wave of Omicron and even before that. Abha.
All right, let's take a look at the economic survey and take a look at some of the key highlights from that as well. It will pull up some of those points as well, and a lot of indicators coming in from that tabling of the economic survey yesterday. The government sees FY23 GDP at 8 to 8.5%. Now, while by some this is being seen as slightly guarded, on the other hand, the government feels the engine is running on track. India to remain the fastest growing major economy in the world during 21 to 24. They're talking about how all the parameters are recovering post-COVID and now starting to chug forward at a good pace. FY22 GDP growth seen at 9.2%. Those are some of the key growth numbers coming out of the economic survey table yesterday. Agriculture to grow by 3.9% in FY22. Now remember, this is something that they also talked about, how the pain on the agri sector wasn't as bad as anticipated. Industrial sector growth growth, they see it at 11.8% in FY22. So that's the number coming in on that front. And services sector growth is forecast at 8.2% in FY22. This is important because remember, this is where the brunt of the pain was felt and they are expecting it to bounce back. Investment is expected to see a growth of about 15% in 21-22. Government again, of course, talking a lot about very confidently about the kind of flows, the kind of wealth generation that we've seen this year so far, and really what to anticipate going forward as well. But Siddharth, this was also criticism coming in, that perhaps the government's talking a lot about one part of the economy that's done very well, but it's clearly not a broad-based recovery. And the question today will be, of course, how will they address that?
And well, like someone said, all manner of English alphabets, including the K-shaped recovery being spoken about. Abha, but let's get you some more details, viewers. And this time, let's focus on the fiscal deficit estimates, because that leads us to the big numbers as far as the consolidation exercise is concerned. And before we talk about this, let's try and bring up those numbers once again that we have there on the fiscal deficit estimate, the 6.8% number, as well as what is likely to be now spoken about. Now take a look at the trajectory of the fiscal deficit. Why is this important? Because this impacts the common man. This impacts the rate at which you borrow, and it's not just some economic number, it is actually one of the most important things. In financial year 20, 4.6%, which went up, as you can see, to 9.3%, and the budget estimate for the current year was 6.8%. And one of the key things that the number that we'll be all looking out for very, very closely is 6.8% going to be bettered, which means could it be 6.5%? Why is that? Because tax revenue growth for the government in the current financial year has been phenomenal, almost up 70%, and we had GST numbers coming in just hours ago, which again prove the fact that there is a tax recovery. So let's move to the key challenges and priorities. The first one is the fiscal challenge. In the current financial year, the government has spent more on COVID support, food and fertilizers. If we take food and fertilizers together, almost an additional 1.5 lakh expenditure in an overall excess expenditure of 3 lakh crore. I must point out here that these numbers could change because we will see the final numbers. These are estimates. The disinvestment target of 1.75 lakh crore, again, big target, a very big sale, which is Air India, but in terms of cash, that has just got the government around 2,700 crore. Neelachal Ispat, pretty much hours back, one of the deals. LIC, and if you're thinking about the LIC deal, well, I can tell you the process is on. The LIC chairman has got another extension. There are a full 2 months left before the 31st of March. But before 31st of March, you have to get in all that money. Will the LIC IPO money come in during the financial year or next year? We don't know. So what do we expect? Support for growth. Remember, fiscal consolidation along with support for growth, will it continue to support the growth and revival? And there are not just reasons of the political economy, but practical aspects to keep in mind. As far as taxation is concerned, this is again a significant point. Do not expect too many changes as far as taxes are concerned. Corporate taxes were changed significantly in 2019. Now the capex theory, the entire focus of the budget, the previous budget, and even before that has been capital expenditure on infrastructure. Is that going to go up? Perhaps around 25%. Farm sector, we saw the rollback, but there has to be something. Housing sector SOPs, the affordable housing story isn't doing that well. And then the PLI for manufacturing, including the most recent one, which was semiconductors. So as far as, and this is pretty much one of the recap points, and we'll stay with this for a few seconds, growth may slow down in the second half of the next financial year. There is clearly some emphasis on weaker consumption and high inflation. Inflation has been going up. There's a cost push pretty much all around. So there are some risk factors. That is why even the economic survey has spoken about 8 to 8.5%. And finally, if you just recap the challenges, there is some uncertainty, and that is why the tap may not be turned off. It may not be squeezed tight. Some of the accommodative fiscal policy, along with the RBI's accommodative monetary policy, is likely to continue. And that is one of the biggest points. Can some of the extra spending on food, for example, or the COVID-related expenditures, will that be rolled back? Higher funds expected for the Rural Employment Guarantee Program. Subsidies on food and fertilizers are going to go up. Like I told you, it went up significantly, including fertilizer subsidies pretty much doubling in the current financial year. So that's the expenditure outlook. And finally, as we talk about this, tax revenues, we saw this year being a stupendous jump, well over 25.6%, but it is likely that that kind of bumper growth in tax revenues may not happen. So we are basically looking at slower nominal GDP growth, lower excise on fuel. Remember, in November, the taxes on fuel were cut, petrol and diesel excise was cut, and there is an election round the corner. Oil companies have not been raising prices for quite some time. So that's the overall picture. But Abha, again, back with you for more details, and we are also going to get several guests lined up on the show today.
Absolutely. In fact, let me get in some voices, with yet another wave of the COVID pandemic, as well as upcoming elections. There are a lot of factors at play as well, and we've got some key voices that have been outlining some of the factors at play that the government may have to consider this time around. A power-packed panel for you. Dr. Montek Ahluwalia, ex-Deputy Chairman, Planning Commission of India. We've got D. Subbarao, our former RBI Governor. Arvind Panagriya, ex-VC Niti Ayog, Professor, Columbia University. Kaushik Basu, economist, Professor of Economics, Cornell University. Dr. Arvind Virmani, former CEA Chairman, the Policy Foundation. Dr. Sajid Chinoy, Chief India Economist, JP Morgan Chase. Jayant Sinha, former MOS Finance, and Rhythm Desai, MD Morgan Stanley. A packed panel this morning to take us through some of their views on really what the budget will bring this time around. Now, it will be revealing, of course, the capex, the fiscal deficit targets for 22-23 just in a few hours from now. So the big question, of course, will be on spending. Will the Finance Minister loosen purse strings, or will they choose to take a more cautious path? Listen in to what the top economist suggests.
Given that we were hit by a recovery, in the short run, a worsening of the fiscal deficit compared to what was expected not be a problem. We had apparently projected a fiscal deficit of about 6.8% of GDP. That was based on, I think, an outcome projection of growth which is probably not going to be realized. So, in the remaining months of the year, I personally think that rather than being too hung up on hitting that 6.8% target, we can actually afford to do a certain amount of expenditure, which actually would help the economy.
The important point is this, that the target she has set for herself is 4.5% by 25-26, which is 4 years from now. So whether you're going to take some relaxation up front and consolidate very rapidly in the later years, or even it out over a 4-year period, is a big decision to take. And my own choice would be towards spreading it out evenly over the 4 years. That's why I said earlier that she must, opt for about between 6.5 to 6% this year, closer to 6%, and in fact go beyond that to give a path to consolidation over the next 4 years to reach 4.5% by 25-26.
All right, let's take a look now at how the markets have traditionally behaved on budget day. And this is actually going to be a fascinating one because remember, this year we're coming out of record highs, a great start to the year, and then a complete slide that we saw across global indices. Now, traditionally, and if you take a look at some of the key parameters here, we've got starting from 2018, You've got, the markets that just were just a touch lower. 2019 up about 0.5% by the end of the day. July 2019, we saw markets again see a bit of a slide coming in, down about 1% or so. 2020 was pretty bad, down about 3.5%. So 2020 we saw the worst day, February 2020. That was also around the time that the COVID impact was hitting, and then of course we know the trajectory of the markets and how they bounced back. And in subsequent waves, we've only in fact seen the markets continue to go from strength to strength. So, this time around, of course, we're coming on the back of a very, very strong move, but then a plummet on the back of global fears. This is again, how we've seen across the Sensex, across certain budgets as well. And again, you see that dip in 2020, but in 2021, if we take a look, 5.3%, that's the kind of gain that we saw. That was clearly one that the markets enjoyed listening to. It was one, Siddharth, that, was reassuring on all fronts.
Yes.
The government, there was no negative surprise. It was reassuring, and I think clearly even this time markets just want to know that the worst of the pandemic is behind us.
Absolutely, and perhaps no shocks when it comes to taxing market gains, but some more voices. Let's hear out Sajid Chinoy, the Chief India Economist at JP Morgan Chase.
The encouraging news is the level of activity is now back at the pre-pandemic level. So we're close to, a little ahead of where we were back in March of 2020. But really the next aspiration has to be, how do we go back to the pre-pandemic path? Where would India have been absent a pandemic? How far are we from that? And how quickly can we get back to that path? And I think this is where a fiscal policy has a role to play. And I would expect that the budget would provide support to close that gap with the pre-pandemic path. Now, a year ago, Siddharth, the intellectual consensus was clear. All countries were just emerging from the pandemic, so there was an open license for fiscal policy to be very expansive. And we saw that in last year's budget with a big push on capital expenditure. There's also a budget which was very well received because of much greater realism on tax revenues and much more transparency. This year, it'll be a slightly more delicate balancing act because on the one hand, I would hope to see more capital expenditure, more infrastructure spending, more health and education spending to help the economy. But the global backdrop has become less benign. Oil prices are close to $90 a barrel. And because of the Fed, global financial conditions have tightened. So the balancing act this year will be, how do you provide near-term support to help the recovery and help jobs in particular? At the same time, reaffirm a credible medium-term consolidation path to preserve macroeconomic stability.
Dr. Virmani, coming to you now, and this is the big question. Should Nirmala Sitharaman now embark on significant consolidation, cut the fiscal deficit this year, or keep the consolidation for later?
So that's a very good question. I would look at it two ways. One, as the economic survey last year very clearly showed, that the best way to reduce the debt GDP ratio, which has definitely ballooned in the pandemic, mainly because of the collapse of tax revenue in the pandemic year. As you pointed out earlier just now, the revenues have of course recovered in the current, after the pandemic year. But in the pandemic year, the debt ratio went up a lot. And as the economic survey showed, and as our study of globally shows, that the best way to reduce the debt GDP ratio is to accelerate the rate of growth. So from that perspective, I think it's very important that the quality of expenditures be focused on, which is focus on those expenditures even for the next year. I think it was very important in the current year, but I think it's going to remain important for the forthcoming year, to focus on those with high labor intensity and high multipliers. Okay, all this stuff has been talked about before, but I think it's important to repeat it. So really the quality of the expenditures in terms of its multiplier effect and how quickly it generates employment, at least in the next 6 months, I think is what to be focused on. And thirdly, the growth rate. As I said, the growth is what will bring the actual GDP, debt GDP ratio down. I think the absolute size of the fiscal deficit is less important. But despite that, I think broadly the restraint on the fisc will remain. I don't think there'll be a big expansion. I don't think there'll be a contraction. It will be kind of go on as far as the intentions of the government is concerned, more or less at the steady level.
Mr. Narendran, let me bring you in here. Do you think as part of its response to the economic impact of the pandemic, the government will or should consider direct income support as well this time around, particularly for the underprivileged?
So we had, Siddharth, we had a few suggestions to the government. One is, of course, to continue with the support through Manrega, because that has been substantial and that has been important. So one is to continue with that as much as is required to make sure that the recovery is complete, particularly in the rural sector. The second part is to say, how is it that we can spend more on creating health infrastructure? Because if you really look at household incomes at the middle class and the lower middle class and the poorer people, you know, they've been hit by the fact that their health expenditure has been far more than they'd budgeted 2 years back or 3 years back. So there is a concern that household budgets are under stress, household balance sheets are under stress because incomes have been hit. If the family is working in some of the sectors that have been more impacted by COVID, jobs have been hit and expenses have gone up in some of these areas. So there is a concern. Those are the households that need support. At the lower levels, you have Manrega. At a more higher level, it's more about how can you secure them against such kind of unplanned for expenses in the future by great expenditure in health infrastructure, and also to create something like a pandemic pool, a pool of capital that is available to respond to any future pandemic, and that can be created over a period of time. And CIS also submitted a paper to the government on that. So I think these are all areas to be done, and the more we can do about creating jobs and stability of incomes, the better chances that we will have of consumption coming back with the momentum that it had in the past.
All right, gentlemen, do stay with us. We have some of the biggest voices dissecting the expectations from budget this time, counting down now, just a couple of hours away. We're going to take a very quick break. You're with us here on India Today. Back in a moment.
Information is not knowledge. The only source of knowledge is experience. As a day of reckoning draws closer, Siddharth Zarabi, Rajdeep Sardesai, Rahul Kanwal and Udyan Mukherjee, with 30+ years of budget reporting experience, India's leading English news channel and India's #1 business magazine, two mega brands get together to bring you the most comprehensive coverage of the coming budget 2022. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
The biggest fight in Indian politics Who will win the big battle of Uttar Pradesh?
बदलिए सरकार को।
क्या कर रहे हो? कौन सा विकास किया है?
क्या रामलला का मंदिर कांग्रेस के लोग बना पाते क्या?
All the ground reportage on India's election channel, Battleground Uttar Pradesh, only on India Today.
You are watching Information is not knowledge. The only source of knowledge is experience. As the day of reckoning draws closer, Siddharth Zarabi, Rajdeep Sardesai, Rahul Kanwal and Udyan Mukherjee, with 30 plus years of budget reporting experience, India's leading English news channel and India's #1 business magazine, two mega brands get together to bring you the most comprehensive coverage of the coming budget 2022. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
The largest state, the biggest political battle. The battle for Uttar Pradesh before the war for India in 2024. The state election that could decide the course for the centre. Will farmer issues become a critical factor? Akhilesh, Mayawati, Priyanka Gandhi Vadra, the challengers, or will it be Yogi Adityanath asserting his supremacy? Every twist and turn, a 360-degree look from ground zero at the battle for Uttar Pradesh, only on India Today TV.
You are watching India Today. You are watching
Welcome back. You're watching India Today, and we're bringing you the biggest voices on what to expect in Nirmala Sitharaman's budget. If you look at the clock, 3.5 hours left for that presentation. But we have with us Jeff Dennis, emerging markets commentator. Welcome to the show, Jeff. And I'm going to start with the biggest question that all market participants are looking out for. What do you expect the government of India to be doing as far as the fiscal deficit is concerned. We've seen slippages. This year's target of 6.8%. We've had a very healthy revenue uptake, but disinvestment has not been that good. So what are your own expectations as far as the fiscal deficit is concerned?
Well, I think we must expect the government to target a lower fiscal deficit for fiscal 23. In other words, probably around the 6.3% level, certainly lower than the year just ending. And of course, that's going to be focused on by the market because the fiscal deficit has been, as you rightly say, has been disappointing over the last few years generally. Fiscal policy has been far too expansionary. This is, of course, as you say, this has been the case in the current fiscal year, despite very, very strong revenue growth. And are we going to get that same revenue growth again in the following year? Therefore, within the budget, I think what are going to be the key issues are going to be: are we going to see any proposals in terms of new structural reforms, which could obviously boost the budget situation down the road, but also investors will focus very heavily on what the disinvestment target, the privatization target is going to be in terms of numbers for the new fiscal year, because it's very important to fill the budget deficit gap, and also because, of course, the disinvestment revenues were so poor, so disappointing, have been so disappointing in the current year.
Jeff, I want to get a sense from you. Yesterday we had the economic survey tabled and they talked about how high forex sustained FDIs, so high forex reserves, sustained flows, as well as rising export earnings would all help as a buffer against tapering, against gradual tapering that is, of course, anticipated. How do you feel some of these elements will play out, and what do you also feel will be the likely impact on currency, particularly the rupee, as that's also a pain point here?
Yes, it's actually been a very impressive performance by the rupee. I think over the last several months it's remained very stable. It's been short-term volatile, but basically the trend has been pretty stable against the background where a number, of course, of emerging market currencies have been weakening in recent months. Now, going forward, I've long thought that the Fed was going to be quite aggressive on interest rates. I've long thought they were going to raise rates by three to four times this year. Now, maybe they do a little bit more than that, but for sure, as of March, they're going to start raising rates. The tapering process will be over. So in a sense, they're going to stop buying any more securities at that point. Then, of course, we're going to focus on when they start to run off their balance sheet. But come what may, we're going to end up with a much, much less accommodating Fed. I think pretty aggressive tightening in 2022 until we start to see a significant downtrend in annual inflation. And with that runs the risk, I think, of the dollar staying relatively strong. And if the dollar stays strong, I think it will be hard for emerging markets generally to attract a lot of new money. Now, India, I think, is not a special case, but India is in a good place relative to a lot of other countries like a Brazil or a Russia or a South Africa or a Turkey. His policy is reasonably good generally. Currency has been stable. And so I don't see India suffering dramatically from that point of view, but you do have to watch the dollar, you do have to watch the Fed. And in the event the dollar does go down this year, which it might do because people get nervous about US assets generally, well, then money will come into the Indian market. And so I think you watch the general performance of the dollar and you watch what the Fed is going to do, but you are against the background where you've had a very good, stable performance by the Indian rupee over many months. And that's pretty good in this emerging market environment.
Jeff, we've spoken about the rupee. I want your thoughts about how oil prices are likely to behave. And it's become a concern. There's a build-up that's happened as far as global crude is concerned. In India, for the last 2.5 months, near about 3 months, in fact, the companies, oil marketing companies haven't passed on the price increase and there was an excise cut. Could oil become a source of worry for the fiscal math in the coming financial year?
I think it could be a source of concern for the economy. Now, clearly, I think there's 2 points there. As you say, if you're not seeing the oil price increases so far being passed on, well, ultimately that could happen, and that will boost inflation. Now, what you've got in India is you've got negative real interest rates, not dramatically so, but you've got negative real interest rates, obviously, with inflation running between 5 and 6%. And so what that might do, if you start to see inflation ticking up because of oil, you might see more pressure being put on the RBI to take some of the burden of this adjustment by, at some point, increasing interest rates. Now, having said all of that, I generally believe, and this is not a consensus view, that with the global economy likely to slow down in 2022, calendar 22, in the US and a lot of other countries, partly because of the Omicron variant at the start of the year, partly because some of the fiscal support for some of these countries will be gradually or quickly withdrawn. I think you're going to see oil prices probably start to trend down at some point later in the year, and that will provide some relief for India without any question. So I would view stronger oil prices from here as not a base case, but as something that is a risk for India. I think the base case down the road is probably that oil prices level off and maybe even start to come down. I think that will provide some welcome relief for Indian inflation and for the economy.
All right. Let's also bring in some other views in terms of the key expectations. Rhythm Desai, MD Morgan Stanley, shares with us some of his views. He's also watching out for any announcements on the global bond indices and any kind of issuance the government's looking at there. He also spoke about the LTCG and said that it would be most unpleasant if it was hiked to 15%. Those were a couple of the takeaways. Let's also hear out some more of his expectations.
If you look at the past 30 budgets, and that is as far back as I go, because we start from 91, 92 onwards. The 2 out of 3 times the market has gone down in the 30 days after the budget, irrespective of what the budget has done, irrespective of what the market has done prior to the budget. Now, if the market goes up before the budget, so it's trading up in the days prior to the budget, then the probability of it falling rises to 80%. So essentially, you're dealing with a situation where the market invariably tends to sell off post-budget. Now, this is purely short run. Budgets, I think, should be viewed beyond their impact on stock markets on a 15 or 30-day basis, or even a 3 or 4-day basis. And I think we should lay more emphasis on the strategic shifts that happen.
Another important market voice, Ramdev Agarwal, a veteran of the markets, had this to say.
If you see the indirect taxes, already GST is happening throughout the year. So there's not much to see in as far as the indirect taxes are concerned. In direct taxes, if you see the corporate taxes at 25 and 15%, I think you can't ask for anything more, except that at the margin, some incentive could be there, PLI kind of thing for further investments. But I don't think the earnings growth cycle is going to come up because of any kind of budgetary support.
Well, the SGX is indicating a positive start. Remember, in 21, we had one of the biggest single-day gains on the index post the budget. This is clearly, what the market's waiting to hear. The headline figure of growth, the headline figure of what the government is aiming for on the fisc. And even in the previous budgets during the worst of the pandemic, the idea was as long as they really stuck to the path, Siddharth, they didn't really have any major shocks. And while they didn't burgeon the fisc, at the same time, they did sort of comfortably relax it.
Abha, that's a very important point. I think the markets and other participants have been forgiving of governments, not just in India, overall, when it comes to fiscal slippages due to the pandemic. Will they continue to be so? I think the voices that we heard, including Jeff and other voices, seem to be saying that that road will probably have a red light coming up very soon. But another view, and this time from a policy maker from India, the chairman of the Standing Committee of Finance in Parliament and former Minister of State for Finance, Jayant Sinha, had this to say when it comes to the budget.
When the Finance Commission and other expert groups have looked at this topic, they have said that the right debt to GDP level should be at 60%. right? Now we've reached 90%, and that's largely happened because of the COVID pandemic, where we've had to spend a very significant amount of money and take our fiscal deficit from 3%, 3.5%, which is where it normally is, to 9.5% and 6.8% and so on. That obviously is going to mean that the debt to GDP is going to increase. And the more that increases, the more rates go up, then the more pressure there is on government expenditure. Those are the dynamics, the debt dynamics that we have to be watchful of. And I'm sure that the Honorable Finance Minister, the Honorable Prime Minister completely understand these debt dynamics and are going to be very prudent and thoughtful about what expenditures to incur as a result of that. And that's why it's even more important for us to have investment-led growth, which can drive sustainable growth in the long term, and that can then bring down the debt to GDP and reduce the pressure that government is facing on that account.
All right, so what are some of the key themes that the budget will focus on this time around? The thrust, of course, likely to be on capex. That's the big buzzword in order to support growth. To fuel recovery, infra could be the main focus. Let's bring up some of those key points for you. Boosting infrastructure, capital goods, capex push, that's really going to support growth going forward, and that's the big expectation. Now, where can the government do this? They can do this on rail, they can do this on roads, they can do this defense. So, real estate, SOPs to boost investment in real estate might be key as well, playing the infrastructure theme. Cement will be a big beneficiary of that, so that's the other expectation as well. So watch out for real estate, watch out for any SOPs also announced separately on the tax front on real estate as well. Capex push will also support growth in capital goods. They'll obviously benefit from the infra theme as well. So we've got real estate, cement, capital goods, infrastructure, that entire basket or gamut of stocks are going to be in focus coming in today. Infra is a big theme. Auto, of course, job creation in order to drive sales. Now, this comes under, also manufacturing. And while PLI schemes, more than 20 have been announced already this year, but clearly there'll be more, incentive that's required there. Duty cut to spur margins when it comes to the metals pack. And remember, metals have really been going from strength to strength on the exchange, burgeoning demand, of course, but rural stimulus will also be the need of the hour. Now, this is a pain point, and this is really where the government can score some marks, because rural stimulus and the consumer, especially at the lower end of the spectrum, has been suffering in terms of disposable income. They've been feeling the pinch. So really, what can the government do in order to create more disposable income, create more spending? And a lot of your companies, such as Staples, FMCG, they're likely to, of course, benefit on account of anything that's announced on that front. So those are a couple of the themes that we're watching out for. Quite a gamut, Siddharth, from infra to real estate to what we're watching out for on prices, because we've seen that spike in input prices across the board, and then, of course, staples.
The union budget accounts for less than 10% of our economy. 90% is within the states, but it talks more about everything. But there are more views that we have for you as far as the budget, the direction, and the overall economic policies. And we had two of the senior most economists from India, Arvind Panagaria, former vice chairman of the Niti Aayog, and Kaushik Basu, former chief economic advisor in the Ministry of Finance, talking about their views. Take a look at that face-off.
India, from 2016, every year's growth has been less than the previous year's growth, which has not happened in India ever since 1947. A 5-year run where each year is lower than the previous year.
So last 2 years, what kind of economy did the UPA hand over to Prime Minister Modi? The last 2 years of UPA, below 6% growth. What was the growth rate in the first 5 years of Prime Minister Modi? 7.4%.
The employment situation for the worst off people, for the farmers, for the workers, for small businesses across the board, it's a very, very difficult time. Barring the people who are at the top end, for India, it's a very difficult time.
If you look at what has been done on the social expenditures, it's way ahead of previous governments, actually, in terms of, well, first of all, money that is meant for the poor goes to the poor. It's not leaking.
Are interesting points of view and clearly very, very diametrically opposite. But let's go back to Sajid. Sajid, what can this budget do for job creation? That's the biggest issue. That's the biggest political issue. And in the recent past few weeks, we have seen considerable stress building up on that point.
Job creation is an issue all around the world. Coming out of a pandemic, even the US, we still have about 3.5 million fewer jobs compared to where it was before the pandemic. Jobs are certainly a challenge in emerging markets and in India. And I think this is happening for a couple of reasons. One is, in many parts of the world, the pandemic has accelerated the transition from the informal economy to the formal economy, which tends to be more capital intensive and less labor intensive. So you can produce the same output with fewer jobs. The second is, because of this transition from informal to formal, you may have a skills mismatch opening up. So there's excess labor in the informal sector, but the formal economy is growing. They want a certain kind of worker, and sometimes that skill type is not available. So this is both an issue of creating enough jobs, but also of ensuring that the skill mismatch is mitigated. Now, what can the government do? My sense consistently for the last couple of years has been job creation is not easy, but what we can do is public investment. And I think this has been the government's focus. We saw in the pandemic year capital investment. So if we look at capital expenditure in the budget, rose from about 1.6% to 2.1%. The target was even higher in this fiscal year that's ending, and I hope the government can meet that target and set higher targets next year. So I think the near-term focus has to be, if there is more spending on infrastructure projects, on health, on education, that will create jobs. The second advantage of that is if you have a sustained public investment push, right? Hopefully over time that will crowd in private investment, and then private investment will create jobs. So this is going to take some time, but I think the budget has to be a catalyst for a big sustained infrastructure push for job creation.
Mr. Virmani, what about jobs? Let's focus on that for a moment. And is there merit in an urban Nariga kind of scheme that's being much talked about?
I think we have to be very careful about the temporary effects associated with the pandemic, which is a very special. It's like a once-in-a-century shock which has happened. And we should not generalize too much. It's not reflected of the normal economic shocks that we have faced, let's say over the last 50 years, or are likely. Of course, there could be climate shocks, etc. But leaving that aside, the normal economic shocks, I think the issue with the pandemic was that, and this we said, and nobody believed us. We've been saying, because we've done the research on pandemics, we said that it's more of a problem in urban areas, because the virus, because it spreads through the air, it spreads through close contact, and these situations arise more in the urban areas. The pandemic will spread faster than the pandemic in the urban areas and will have more negative effects. We've been saying this for a year or year and a half, but nobody kind of believed us. So the conditions are special. The severe effect on urban employment is due to this very special factor. Now, I think it would be a mistake to overplay that. Of course, there will be some situations where we have some new epidemics, but this is not the problem in general with every shock. So I think some attention needs to be paid to that, but overdoing it, I think, would be a mistake.
Well, that's an important point. But coming to you, TV Narendran, as far as the higher medical expenditure due to the pandemic and costs that have gone up for people, what do you think? Should the budget be providing some sort of relief when it comes to more exemptions on medical insurance and the entire gamut of expenditure that people have had to suffer?
One needs to look at it in the overall context, because if you look at it from the government's perspective, they've spent far more on vaccination than they had planned to, right? By providing it across the country. So, and now with the booster shots, etc., there are a lot of expenses the government is directly incurring, which would have otherwise been incurred by the businesses, corporates, or individuals, right? So the government needs to see how is the money best used. in the most impactful way so that it reaches all citizens, and more so. Yeah.
Narendran, do you also support the case for further tax relief, given the government has managed to secure, far more revenues on the back of fuel taxes, GST, and we all know the record collections we've been seeing on that front?
No, I'm not arguing against that. All I'm saying is that, one needs to look at how much of money the government needs to spend on what, and if it is first ideally spent on vaccines, then it should spend it on vaccines before it gives the tax relief, because the tax relief is also relevant only to a certain section of society, whereas vaccines are relevant to all sections of society. And I think, to be fair to the government, till 3-4 months back, they were also not clear how much will be the revenues vis-a-vis the expenditure. I think the GST collections have been great. The recovery has been strong. Tax revenues have been strong. That probably gives the finance minister more headroom to maybe pursue some of the ideas that you're suggesting. But certainly the fiscal health looks much healthier than it was maybe 6 months back.
Well, those expectations are clearly going to be right up there. And as we count down, we're going to slip into a short break. Stay with us, and our guests will also be here as we come back with more coverage on the budget.
Information is not knowledge. The only source of knowledge is experience. As a day of reckoning draws closer, Siddharth Zarabi, Rajdeep Sardesai, Rahul Kanwal, and Udyan Mukherjee, with 30+ years of budget reporting experience, India's leading English news channel and India's #1 business magazine, two mega brands get together to bring you the most comprehensive coverage of the coming budget 2022. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
The biggest fight in Indian politics. Who will win the big battle of Uttar Pradesh?
बदलिए सरकार को।
क्या कर रहे हो? कौन सा विकास किया है?
क्या रामलला का मंदिर कांग्रेस के लोग बना पाते क्या?
All the ground reportage on India's election channel, Battleground Uttar Pradesh, only on India Today.
You are watching India Today. You are watching.
Information is not knowledge. The only source of knowledge is experience. As a day of reckoning draws closer, Siddharth Zarabi, Rajdeep Sardesai, Rahul Kanwal, and Udyan Mukherjee. With 30 plus years of budget reporting experience, India's leading English news channel and India's #1 business magazine, two mega brands get together to bring you the most comprehensive coverage of the coming budget 2022. India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
You are watching India Today.
Presented by LIC, हर पल आपके साथ. Powered by Duragard Cement, a Nuvoco product. In association with Snapdeal.
You're with us here in India Today. We're counting down to Budget 2022. What's in store in the big word, growth? What's in store for growth as we track the booster shot budget? Saurav Majumdar, editor, Business Today magazine, also joining us as we count down. Saurav, every expert that we speak to, every market analyst, every policy maker only has eyes on one thing. What is the growth trajectory going to look like? What is the fiscal deficit glide path going to look like? What's your anticipation or expectation from the Finance Minister this time?
Yes, Abha, I think the most important point, I couldn't hear your question very well, but I must say the expectation is very clearly that, here will be a budget which will be helping in creating jobs. It will be also, putting expenditure in the into productive uses. We would hope to see something on disinvestment going forward, because that's been a story which is not playing out very well. And of course, it will be good to see something really importantly being done on the MSME sector, which is extremely stressed.
Saurav, welcome. It's going to be a long day for all of us. This is Nirmala's fourth outing, the 10th budget for the Modi government. Before the numbers, really a macro overview from you. What should this budget be delivering, given the overall context, given what is happening to the economy, all of those points that people talk about?
Siddharth, I think the basic thing would be that while there is fiscal headroom, because the revenues have been very, much buoyant this year, there is a lot of fiscal space for which the government can play with. But there is also this whole business of not being able to spend adequately. So there is a lot of money which is there, which is not being able to be spent adequately because of projects not being pushed through because of the Omicron and the pandemic in general. So I think there should be a very clearly balanced view where you put expenditure in productive uses, like I said, but also eventually remember the fiscal glide path as well. So I think it is an important balancing act which the Finance Minister will have to be putting together in terms of both expenditure to push growth and get the economy continuing to grow at the economic survey talks about 8 to 8.5, but I think the general consensus is it may not be that high. But then, you'll have to have that balancing act.
Let me also bring in Anant Narayan, banking and financial markets expert. Anant, I want to take that point forward. A very good morning to you. There has been some criticism that there hasn't yet been enough spending. I think we're looking at about 50% of the total outlay so far. What is the delay? What can we expect this time around? What should the priority be when it comes to spending? And also, from a banking and financial services point of view, are you watching out for any key announcements this time, whether it comes to PSP capitalization, whether it comes to any kind of digitization or tax relief for the financial sector?
Good morning and happy budget day to you and all your viewers. Look, on the first point, I completely agree with the previous speaker. I think the good news which came out was actually yesterday on the numbers for the union budget, the accounts as of December. The revenue collections are looking fantastic. And it looks like for the entire year, they might end up with revenues 3 lakh crores in excess of their original budgets. That gives them a lot of fiscal space. Of course, for this year, there are also additional expenditures, fertilizer subsidy, food subsidy, Narega. There's also the Air India issue, which I think will incur some cost. So there is enough fiscal space available. The revenue collections are looking good. That's the first part. The criticism about less expenditure so far, again, in December, the expenditure has picked up. I think this government is serious about at least fulfilling its commitments as far as capital expenditure is concerned. And on the revenue expenditure as well, in December, we saw a big pickup. Yesterday's economic survey talked about bearable strategy. I think it's a euphemism for saying we're going to spend everywhere. I think they're definitely going to spend, and therefore I'm not so concerned about the spending bill. I'll tell you what I'm looking forward to, both for this year as well as the next year, more importantly. Given there seems to be buoyancy on the revenue side because of this formalization, which is really impacting us and helping us, we can't forget the fact that the bottom half of the pyramid is really struggling. There's a lot of pain. Unemployment is a definite problem. So we need jobs. We need domestic output. That needs a lot of money into infrastructure. The National Infrastructure Plan needs funding, both from the fiscal side as well as from other sources. Second thing, the point you made about things like privatization, things like trying to bring in more private capital, we have to see progress on that. Unfortunately, since the last budget announcements, we've not seen progress on the nationalized or the privatization of the two nationalized banks, the insurance company. hopefully, I think she might announce the progress on the IPO of LIC today. So the two things I'm looking for is one, a dramatic continued increase in capital expenditure for next year as well. I'm expecting a 20% increase over this year. I think expenditure even this year will catch up. Central expenditure, they're really pushing hard. I think it will catch up.
Right.
Third, I'm expecting some directions on things like privatization. Are we going to continue with that same vigor that was promised in the last budget, or has the politics changed and therefore will we be a little more circumspect? I expect them to announce a roadmap for definitive privatization across multiple sectors.
Well, Anand, that's a very important point, but let's go back to the point that you made about excess revenue over budget estimates. And if you look at the tax GDP ratio, the total tax GDP ratio, which was estimated, was 10.8%, not perhaps as high as the peak years in the current context of FY17 and 18, but very, very significant. So that's going to be a very important number to look out for, because that gives the government of the day fiscal headroom. It also allows them to do more as far as schemes are concerned. And then one very quick follow-up point with you as we look at these numbers. The key issue really is, how do you spend the tax windfall? Is it to be taken for fiscal compression, or does it mean that this money should be utilized going ahead for continuing with measures to support growth?
I think they'll do a bit of both, Siddharth. So first of all, while I'm exulting at this numbers on tax collections, it's because we've got used to seeing actual tax revenues come well short of budgets. So kudos to the last, the Finance Ministry for the last year. They've given us very reasonable projections, and now we're going to end up beating those. I think even with the improved tax GDP ratios, it's going to be marginal. It's going to be about 11.2% or so. So we still have a long way to go in terms of improving tax to GDP. But yes, it does give us room. I think a couple of things gives us room for both fiscal consolidation as well as for expenditure. One is the nominal GDP, Siddharth, is going up. It was projected at 222 lakh crores last year. It is going to end up at 232 lakh crores. Next year could be 262 lakh crores. So as your denominator goes up, your fiscal situation starts to look better by itself. So, even with the same fiscal deficit number, which was projected last year, you'll end at not 6.8%, but 6.4% of GDP, which looks great. Second thing is, I think they will continue to expend. Last year, they showed a very definitive push towards capital expenditure. I'm expecting, as I said, that push to continue this year as well. So to that extent, I don't think they will scrounge down on expenditures. At the same time, because your GDP is expanding and because your tax to GDP seems to be improving, I think they will continue to show fiscal consolidation of 6%. So to answer your question, I think they'll manage both. Show fiscal consolidation maybe to 6% of GDP from 6.8, which is a definitive move. At the same time, have, let's say, 20% increase in capital expenditure. One last quick point, Sid. The area I'm really worried about is states. While we are exulting about the center, the fact is states actually spend far more than the center does, particularly on capital expenditure. They are not getting enough funds overall. And frankly, their finances are a bigger hole than the center is at this point in time.
That's an important point, and perhaps we will see another 5-year extension to the cess, but that's a subject outside of the budget. Coming back to the budget numbers, and as we count down, less than 3 hours now, and joining us, Dr. Subhash Chandra Garg, former Finance Secretary, a person who has prepared several budgets. Morning, welcome to India Today. Dr. Garg, the big question, what is it that you are looking out for, and what is it that you are not hoping happens in this budget?
Let's put it this way, the budget, including the budget speech, is all sealed. So whatever has been done is now going to be sort of read out, presented. You can't do any change anywhere. So I would rather sort of postulate, or in a way estimate, speculate that what might be in the budget. From that point of view, I was listening to this discussion on the revenue. I think this is fairly well sort of argued. My own estimates are also that on the revenue side, on the taxes, we'll probably see on both the corporate taxes as well as the income tax probably an increment of about 2 lakh crores. On the customs, we are also seeing some increase, but excise might be slightly down. And on the GST side, CGST, again, there might be an increment of about 50 to 75,000 crores. So all put together on the taxes side, I see increase of about 2.5 lakh crores. On the non-tax also, there has been good developments. RBI dividend was higher. Then you have even the revenue receipts from the telecom side, spectrum revenues, area payments have been better, and dividends have also been higher. So I expect that the non-tax revenue receipts, which were estimated at 2.4 lakh crores in the budget, should come close to about a lakh crores more, so 2.4, 2.5. Which then will probably be compensating the downsize in the disinvestment side, depending upon how do you put the numbers for the LIC. Government may put a little more optimistic note on the disinvestment. So instead of revising, let's say 1.75 crores to 75,000 to 80,000 crores, which is more reasonable in my opinion, it might do about 1.10 or 1.20 lakh crores.
Right, Mr. Garg, so let me pause you there and I'll come back to that point. Key numbers that you highlighted when it comes to divestment and the trajectory there. Punita Kumar Sinha also joining us, founding partner, Pacific Paradigm Advisors. Punita, good morning. Great to have you with us. Markets, are keenly eyeing this budget. Everybody wants to know whether we're going to continue to see the kind of momentum that has built up. And even in the economic survey, the government highlighting the kind of wealth generation through IPOs, preferential issues, and the kind of momentum that stock markets have seen like never before. What's required in order for us to see that continue this time around, despite the global backdrop?
Well, great question. I think it's going to be very difficult for the Indian markets to continue to rally given the global backdrop, just based on the budget. So the budget will have obviously some positive or negative short-term impact, but then it will become business as usual for the markets, and we will start focusing on all the things that we normally focus on: what's happening to growth, what's happening to valuations, interest rates, inflation. So I think one of the things that I would like to see is that the budget is not inflationary. So some bit of incentives more for the PLI schemes, etc., because that's proven to be quite successful. I think we really need to keep addressing the supply side bottlenecks, especially due to COVID as well, and to have more production in India. So I think that's going to be important, and also to make sure that our fiscal deficit numbers don't grow, rather they show directionally a consolidation. Otherwise, our real interest rates are negative, and we do need to see that our interest rates don't have to go up sharply. I think those are the two things that I think are going to be important from a market perspective. Of course, growth is always the focus, and I expect the budget to be growth-oriented given the forecasts that they've made for the next few years. So the other two factors, I think, are going to be important.
You touched upon inflation, Punita, and there was already a slight warning with regards to imported inflation, talking about oil remaining between 70-75. That's a safe zone as of now. Do you think that's realistic?
Well, I do think that, it's hard to predict what oil prices are going to do. But I think given what the commodities have done last year, oil has potential to go up, especially in the wake of some of the geopolitical issues that the world is facing. In those kind of situations, typically oil can go up. And if oil does go up, that's all the more reason that the budget factors that in appropriately and doesn't, see more inflationary or higher deficit numbers, and that the growth numbers are appropriately managed.
Let me come back to you, and this is to do with the point of execution. Two examples. The bad bank, it took almost a year, days before the budget for the final announcement to happen. We can go back in time, the pension bill amendments pending from the year before. All of that said, the ambitious plan on infrastructure is execution an issue, because when we see some of the line items, we see that in the first 8 months, expenditure growth has actually been lower than what was projected for the current financial year. Saurabh Majumdar, that question was for you.
Okay. Siddharth, I think you've actually hit the nail on the head. I think it's a very important point that expenditure, like I said at the very beginning, needs to actually follow the announcement. There has to be real expenditure on the ground. There have been multiple reasons why this expenditure has lagged in some form or the other. But I think that is important. That's on the one side. Second point I would like to make is absolutely what you said in terms of the implementation of the large announcements. For instance, the national monetization pipeline. That's a 6 lakh crore plan, which is quite interesting, which is quite detailed. But the taste of the pudding, lies in the eating. So if you do not actually take it forward in terms of the structuring of some of these, some of these assets, making them attractively priced so that there is investor interest, I don't think that's going to work, just by announcing those plans. The government's intentions, even like we said in the magazine, are noble on the monetization front. They do want to push it through. Air India, like we all know, is a very important breakthrough which the government has actually undertaken. It shows the resolve that they are willing to actually tinker even with the structure of the deal and so that it becomes more attractive to investors. So I think all of that needs to be done, because if you have 1.75 lakh crore in terms of announcements and target, and 9,500 crore or thereabouts at this point, or a little more now that Nilachal Ispat has happened, you really need to push, step on the gas on that front. Monetization, privatization and disinvestment, these three engines have to fire.
Derek, let me come back to you. Now, there are a lot of assumptions built into this math, and I was hoping that you could shed some light on it. I mean, you, of course, were taking us through the divestment numbers, but let's take a look at the kind of math they outlined yesterday. They're assuming a normal monsoon, assuming, of course, a constant momentum on exports, assuming a gradual tapering, assuming that margin on oil. There are a lot of assumptions built in, at least into what we saw in the economic survey, if that's any indication of what's to come today. And I want to get a sense from you on whether or not that was really off the mark. As you said, the budget's already sealed and it's going to be delivered soon. But in terms of, whether you feel that was any indicator and if that was even close to what can actually be delivered. Dr. Garg, that was for you.
Oh, I see. See, in terms of delivery of the budget, I think we should, there are some very important developments which we should keep in mind. Number one, the budget on the expenditure side, roughly about 15 lakh crores out of 35 lakh crores is where the government has nothing to do, interest payments, pensions, and what is transferred to the states. So what is left, about 20 lakh crores, is where the government need to do. On that, one important development is on the food side. So food subsidy, which was planned to be about 2.4 lakh crores, is
we seem to have lost that link with Dr. Garg. We'll come back to him. I want to go to Saurabh once again. Saurabh, one of the issues also that we have witnessed during this current year is the threat of inflation. We have seen some words from the RBI, but very clearly there is a tough balancing act that the monetary authority also has to do in the year ahead as far as inflation is concerned. Do you expect a significant round of tightening in the months ahead? Saurabh Majumdar, that question is for you.
Yeah, Siddharth, I think inflation is a very real risk. It's a clear and present danger. The point is that, you have more or less, as I would think, from the policy side as well as from the corporate, sort of corner room side and bottom lines, we've more or less figured out how to deal with various waves of the pandemic. Even the second wave, which was very debilitating otherwise, was fairly well managed by the companies, and Omicron was slightly milder, so that's been a slight bit of a relief. But inflation, like the RBI has warned, is definitely an important threat which is looming. Most importantly, imported inflation, because there is going to be, there is this whole oil prices, threat playing out. There is the, gradual. They expect orderly withdrawal of liquidity globally, but that's wishful thinking in some sense, I would think. So far it's been all right, but I think that's going to be a threat going forward, all of which will have a bearing on inflation. Now, RBI has over the last 2 years done a very good job, I would say, in terms of pushing and sort of playing along with the government in terms of matching whatever the government has done in terms of stress sectors, easing liquidity, and the whole gamut of steps which RBI has taken over the last 2 years. But this year, RBI will have to, I think, necessarily look at, a tightening of rates so that the inflation threat is addressed. And I think that's going to be a key challenge for not just the government, but and the companies, but also the governor, how he will manage it, what time. Timing is critical, Siddharth, as you know, and you've covered, this sector economy for a number of years. I think timing is critical.
Absolutely.
We do not want to be behind the curve on that one.
Right.
All right, let me bring in Hiren Ved, Director and CIO, Alchemy Capital Management. Hiren, a very good morning, welcome to this power-packed session that we're having just as we count down 2.5 hours to go before we actually see what's going to be in the paperless budget this time around. Hiren, from a market standpoint, what is the big theme that you expect to play out? Is it going to be infrastructure? Is it going to be rolling out that capex? Is it going to be an eye on reform? What, according to you, will be the big trigger this time?
So I think, Abha, I think very clearly from a market perspective, what the market would be looking for is growth, right? And I think that the growth impulses were set in motion in the previous budget. I think there is reasonable fiscal room. I wouldn't say that there is too much room because we fell short of divestment. But I think since revenues have tracked ahead of estimates, thanks to inflation and good corporate performance, my sense is that more spending on capital investment, aggressive divestment is something that the government is something that the markets will look for. And I think from that perspective, just letting or getting the growth impulses more momentum is what the markets would look for. I think in terms of reforms, while budget is important, but I think now reforms have in many senses been decoupled from the budget, right? So I think we've seen a raft of PLI schemes which have been announced even outside of the budget, and maybe a few more maybe talked about in this budget. So I think in many senses there is the only thing that the market would look for is consolidating on the growth impulses that were set in motion last year.
And that's a really important point that you also just touched upon, and we'll come back and talk more on that. How we can also see a further impact when it comes to manufacturing, build on those PLI schemes and lead to, of course, more jobs.
Well, we'll take that and other points as we count down to the budget, but time for a short break. Stay with us.
India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
$100 billion items of clothing are sold each year in the world, double the figure 15 years ago, a consequence of fast fashion, the response to the latest trends. Even at the raw material stage, pollution is present. 26% of our clothes are made of cotton, which requires a great deal of water. Then there are the pesticides and fertilizers. Making a t-shirt requires water equivalent to 70 showers. More than 60% of our clothes are made of polyester, which comes from oil, so their carbon footprint is considerable. Dyeing, washing out, softening the raw material require products that are as dangerous for workers that use them as they are for the environment. Transporting clothes is far from environment friendly. A pair of jeans can travel 1.5 times around the world. Even in our homes, clothes continue to pollute. When they're washed, our polyester shirts and shorts release microfibers into the oceans. As much as 500,000 tons per year, the equivalent of 50 billion bottles of plastic. Textiles are one of the world's most polluting industries. 1.2 billion tons of greenhouse gases are released into the atmosphere each year, more than international air travel and maritime shipping combined.
You are watching India.
India Today Roundtable Goa. Listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
are watching India.
Welcome back. You're with us here on India Today, and we are tracking for you the booster shot budget. What's going to be in store as we count down to Nirmala Sitharaman announcing Budget 22. Let's take a look at some of the key metrics that we're going to be watching out for as well, and some that have transpired. Let's take a look at those inflation numbers. It will be a key talking point as to how the Finance Minister has factored this in to the math of this budget. We all know that CPI has been rising, and take a look at that screen in front of you as well. You'll get a sense of how we've been seeing that build up on inflation. And primarily, of course, we're also seeing edible oils. That's the major chunk of why we're seeing that spike coming in. So can it moderate? Can it be kept into control? What are some of the actions that can be taken? That will be a key talking point. 5.3 is what we're looking at right now. That's the key number to keep in mind when it comes to inflation figures. Another important metric will be, of course, spending on healthcare. Let's pull that up for you. Remember last year's budget, this was a very, very big part of the budget. Given that we're coming out of the third wave, they've already, of course, factored in quite a substantial sum of expenditure continuing on healthcare. But what will be the step now going forward? That's going to be the big question. Actual expenditure, just taking a look at that graph, has come down post the peak. What will be the continued outlay? What will this mean in terms of proportion of overall revenue that they're allocating towards healthcare expenditure? That will again be an important question that we'll wait to hear answered.
All right, let me go to Anant Narayan, who's been waiting by patiently. Anant, one of the key concerns is what is going to happen on the oil front, and that impacts our import bill and in turn the currency. What's the outlook for the currency according to you?
So that, look, there are some things we can control, some things we can't. Unfortunately, both inflation, particularly with relation to commodity prices, and things like edible oil prices, and things like global shortage of chips, etc. Frankly, there's not much that we can do in the short run to control these things, and we have to take what is dealt out to us. I guess the question really is, when it comes to inflation and imports, what is it that we can control within our economy? Here is where the concern and the link to the budget is. While we exult about more government expenditure, and we want them to spend more on capital expenditure, for instance, or on healthcare and education, all good causes. The problem also is when the government spends and borrows money to spend, it creates money that in turn creates demand, and that in turn can create both imports as well as inflation. Unfortunately, as a country, we've not done very well in meeting the demand that's created by creation of money. Every time, for instance, see last year, from September onwards, our trade deficit has started to cross $20 billion per month on average. And a lot of it, by the way, is not just gold and petrol. It's also things like electronics. It's also chemicals. It's also plastics. It's also a whole bunch of manufactured products. So the moment we see some demand coming through, and in this case, from the top of the pyramid and the top of the K-shaped recovery, immediately translates into imports rather than from domestic production. So, two real things that we need to do. One is, of course, lay the ground for domestic production and employment to go up. Which is why it all boils down to what are you pushing into infrastructure and creating an enabling environment for MSMEs and manufacturing to pick up things like PLI, etc. I think that's very, very critical, because unless we create our own output to meet the demand created by fiscal spending or by monetary policy, etc., we will always be in this loop of inflation and current account deficits, etc. On the currency, Siddharth, look. At the moment, the balance is looking a little skewed. We are seeing very, very high trade deficits on a monthly basis. As I said, $20 billion per month. If you average that, that becomes $240 billion in a year. Services exports are looking very, very good. So even if we get $140-150 billion of net invisibles, we are still left with something like $90 billion of current account deficit. That's a 3% current account deficit. Again, we have plenty of reserves. RBI is sitting on $635 billion of reserves, so no problems on that front. They can manage currency markets, and I think they will manage currency markets in the short run. However, over a 3-4 year period, if we consistently continue to import every demand that comes up in the economy, this is not good news at all for us, neither from a jobs and output perspective, nor from an inflation perspective, nor from an external balance perspective. I think that's the real bottom line. Whatever you do in the fiscal policy, yes, you have to spend money right now, but make sure it translates into jobs and output so that we don't get into this loop of inflation and trade deficits and current account deficits.
All right, several key points there. We have both Hiren and Punita also with us. Let me come to you, Punita, on this, because another criticism is that what we're seeing right now is really a K-shaped recovery or uneven recovery. There's been a lot of talk on what can be done for the unorganized sector, for MSMEs this time around. So while on one hand we have the government tom-tomming the amount of wealth generation that we've seen in this last year in the capital markets, on the other hand, the criticism is that it's not a broad-based recovery. What would you like to see in order to ensure that that the needle moves ahead now going forward?
Two important things that I think we need to focus on. The organized sector is obviously showing great resilience, and I'm on boards of lots of companies. But there too, we are seeing some headwinds. The headwinds are coming from wage pressures. So wages are going up. So to the extent that people have jobs, I think the wages are increasing, so they are able to manage in an inflationary environment. But the companies obviously are going to focus on margin pressures. We're also seeing raw material prices going up for companies. But still, nevertheless, the revenue growth has been strong. But going forward, I think while the revenue growth might be strong due to growth, I think margins could be under pressure. Now, on the unorganized sector, the MSME, there is still a lot of pain there. And a lot of that is because of COVID.
Punita, I'll have to cut in here because we are seeing visuals live that just played out. That was the Finance Minister Nirmala Sitharaman entering North Block just before the cabinet meeting that will take place around 10:15 a.m. and then the budget presentation at 11. Abha, I want to quickly take a point with Mr. Subhash Garg. Mr. Garg, for the entire concerns that we are expressing, oil prices, food and fertilizer prices, overall inflation, but the bigger issue is private consumption. Private consumption still being lower than pre-pandemic, and private consumption, as you know, makes up almost 55% of our GDP. Can there be anything that you expect to give a boost to private consumption?
See, the private consumption by the government is basically in the form of either transferring some cash or the support in the form of kind, or give some employment income in the form of the NREGA, etc. There is no other direct measure which the government undertakes in the budget. The policy sides are different. So in this, the NREGA continues to be attracting a lot of demand. This year also, it's under budgeted in my judgment. So you would see increase in the NREGA, and next year also, assuming that the same kind of situation would continue, because there is a very large section of workers who are either not getting employment or are facing the wage loss situation. In the organized sector, there is a good increase in wage and there is wages pressure, but in the unorganized, which is roughly about 70-75% of the employment market. So I think government can continue to provide budget for the NREGA. The demand side is being met basically by sort of providing the food cheap or the free of cost. There would be a major decision to be taken because this food subsidy, the free food scheme runs out on the 31st of March. But what do you do next year? Should you continue with it or not? You have another problem because you're sitting on, you buy about 100 million tons of food grains. but your
Right.
food security schemes takes about 50-55 million tons. So you can't leave it with the FCI and incur
Can't leave
cost
it
of
there.
carriage
All right.
only. So I
All
think
Let me bring Hiren in as well. Hiren, private consumption, want to see a boost on ground, jobs, consumption. These will be, some of the key themes. And in terms of really what tools the finance minister has, what do you feel it's more realistic to expect? Where do you feel the priorities will lie among some of the sectors that are likely to benefit from budget 2022?
Yeah, so I think there is definitely a need to boost consumption at the bottom of the pyramid. One way to do it is to increase the allocation to Narega, because there was a lot of job losses in the unorganized segment, also in many of the service sectors, and we have yet to see full resumption of employment opportunities there. So I think maybe, if you remember many years back, there was a concept of an investment allowance reserve, right? Which means that if companies did capex, they got a tax break. I think some kind of employment allowance reserve could be very interesting, which encourages companies to hire people, and if they hire more people, there could be tax benefits that could be availed. And I think some form of income transfer, whether through Narega or some of the other, even through the Krishi Kisan cards, if there is more credit and money which is available to the bottom of the pyramid, I think that would be very, very useful, because clearly urban consumption has done very well, but rural consumption is clearly flagging. And I think, to some extent, stimulating consumption at the bottom end could actually help manufacturing, because as capacity utilization goes up, companies will then want to do more capex. So I think there are tools available to the finance minister, for putting more money in the hands of people at the bottom of the pyramid.
Hiren, one quick point with you. The real estate story, and we have seen so much play out during the Modi years. Affordable housing was a theme, but one gets the sense, if you take a look at some of the data and anecdotally, that affordable housing hasn't done so well because a certain kind of strata has suffered job and income loss in the last 12-18 months. Do you expect anything for affordable housing and an uptick in that particular segment of the sector?
So I think, housing has always been in focus in every budget, right? And I think every time to encourage more housing, there are more tax exemptions, etc., which are given. But as you rightly put the nail on the head, it's not about tax benefits or making it more affordable. It's about people having incomes to afford a house. And that can only happen through greater, employment generation. So I think one other area which, India keeps talking about, but we haven't really seen any specific measures there, is to enhance industries like tourism, right? Which are very, very employment intensive. And I think that's also one sector which has suffered very, very dramatically because of COVID. And I think if there is some targeted benefits that are given to service sectors like tourism, restaurants, small scale industry, I think that would go a long way in kind of boosting incomes.
Right.
And then indirectly their housing.
Right. Shankar Iyer, welcome to the show. It's going to be a long day for you as well. I want to begin by your opening comments, really. If we go beyond the budget a little bit, when it comes to the overall play of business, the last couple of years, especially post the COVID pandemic, have been years where big business has gotten bigger. Small business, which has received support, for instance, through measures like the emergency credit line scheme, is still struggling. What is the theme that you think will play out and what will work for the Modi government from a political economy point of view?
Well, ideally, this is going to be a budget where messaging balance will have to be achieved. So you'll have the finance minister will try and message to the industrial and manufacturing sector and to the larger economy that they will keep the growth impulses going. And given the fact that there are elections in 5 different states and Uttar Pradesh being very critical, they will also have to message that they are being the bottom of the pyramid.
Are you making a distinction between messaging and concrete measures, Shankar?
Well, budgets are normally, Siddharth, largely about messaging, because at the end of the day, and Saurabh Garg is there, he will tell you that, the central government is at the most can issue sermons on Sunday, and the rest of the 6 days, it is the state governments which have to implement. And currently, state governments are sitting over between 4 and 5 lakh crores, which is unspent, which I think is completely unpardonable, but there it is. So I think the messaging, coming back to your question, the messaging will be about, so the government, in a way, it's a good place to be in, because private final consumption expenditure is still below 2019 levels. So how do you prop that up? So your title of your budget program is booster shot. And I think the one big issue that will come that the finance minister will have to speak about is how much of the country is vaccinated and what is the road ahead there to ensure that the contact.
Shankar, very quickly, isn't it time that the vaccination theme doesn't get overplayed? The productive parts of the economy, in a way, the urban areas, the factory workers, all have been double vaccinated. So how much more can we continue to push the vaccination theme and perhaps also realize more money through cesses on that account?
Well, next to Omi Bhai or his cousin, somebody might surface, a new variant might surface. So the government has to take a call on how they will ensure that contact economy gets going. So somebody spoke about tourism, hospitality, aviation, and a large part of the retail, the small businesses. They're all being hit because there is this constant fear of people are not coming out. And even if they are coming out, then there are government restrictions. So how the economy is going to open up.
Let me take that point very quickly. Let me take that point with Subhash Garg. Subhash Garg, explain to our viewers the reluctance, and I use that word consciously, to intervene for those who are immediately impacted. In the current wave, we have seen, whichever way you describe it, restaurants, hotels, tourism take the brunt of the third wave. It's a wave that has perhaps receded, and that's good. Why is there this reluctance to provide immediate support? It's good that you have long-term targets, investment, infrastructure, capacity building, but why not some immediate relief?
See, in my judgment, there are 2 reasons. One, the most impacted segments in this contact-intensive services or the trade businesses, hospitality sector, are the small businesses. In fact, single account, on account kind of businesses where people work for themselves or with very small number of labor. Unfortunately, in India, we don't know them. We don't have any databases. We don't register them. We have excellent unique ID for individuals, 130 crores, but we have 8 crores of such businesses, but we don't know them. We don't register them. So it's our inability to reach out to them. That's one. The other one is I think the reluctance of the government to sort of dispense what was considered as kind of direct demand support or the direct cash or support to them.
Right.
The government has been reluctant to do it. It has gone through the guarantee route to give to the MSMEs, which are bigger ones, not the smaller ones. So I think
Dr. Garg, please pause that thought because we'll have to come back and pick up this theme after a very short break. Stay with us.
Thank you.
India Today Roundtable Goa, listen to leaders like Pramod Sawant, Arvind Kejriwal, Mahua Moitra, P. Chidambaram, Devendra Fadnavis, Sanjay Raut, Sudhin Dhavalikar, Vijay Sardesai, Utpal Parikar, Amit Palekar, Randeep Singh Surjewala, and many others only at India Today Roundtable Goa, 3rd February 2022.
Are we in the end game of the COVID-19 pandemic? Well, this is possibly the question everybody on the planet is asking. A pandemic-causing virus can stay active for decades. But did you know that herd immunity and stabilizing of the virus through a less dangerous variant could end this pandemic? Well, researchers are now debating if Omicron is that variant that begins the end of this pandemic. Omicron is a highly infectious variant. Due to its highly communicable nature, it is a dominant variant in several countries, about 171 of them. So what does this really mean? It means that the immune systems of many people are now trained to identify and neutralize the virus. This is also a key to achieving herd immunity. Vaccination is another factor that helps to stimulate herd immunity. It is a state of the disease when the virus doesn't have enough victims to infect or spread to. In November 2021, South Africa reported the Omicron variant to the WHO, after which scientists found some facts that's going to interest you. South African researchers found that people who are previously infected with Delta variant can catch Omicron, but those infected by Omicron can't be infected by the Delta variant, especially if they are vaccinated. The published study was based on conducting samples from 23 people. The study tells us that Omicron variant has provided immunity against the other variant of COVID-19. The results from combined studies tell us that Omicron can displace Delta as the overarching variant. It also offers immunity from the much deadlier Delta variant that led to serious illness and deaths. Another study involving research analysis of 466 patients from Omicron and more than 3,000 patients from previous waves. The results are quite optimistic here as well. Researchers say that Omicron actually could be the reason why this pandemic may end. In fact, these studies are only indicative and conditional to the emergence of new variants. If Omicron turns out to be the most stabilizing and replacement variant for previously existing ones, it could be the one that would help in ending this pandemic.